Hey guys, it's David from bargainissues.org. I got another one here for you. I saw an article today in the Wall Street Journal saying that the Harvard Endowment Fund has been going around and very quietly buying up farmland in California, including hoarding the water rights to said farmland. So it got me thinking, how does a little guy get in on this farmland investment action? Most of us certainly don't have the ability to go and buy large tracts of land and start operating farms and doing all this stuff. I've got about zero interest in becoming a farmer. I can freely admit that. And I guess more importantly, is it even a good investment? Well, there is a real estate investment trust, a favorite type of investment of mine. I love real estate investment trusts. Check out my Facebook page, Bargain Issues. I posted something on there about real estate investment trusts a little while back that kind of tell you what they are and what they're about. But this is called the Gladstone Land Corporation. Its stock market ticker is LAND, LAND. That's how it's listed on the stock exchange. And this is an interesting real estate investment trust because it focuses exclusively on farmland. So a small investor, an individual investor, could follow suit of what the Harvard Endowment Fund's doing, and invest in farmland should you so choose. I've pulled 10 years of financial data off of Morningstar. I'm not seeing this as a wise investment right now. Maybe it's a good idea for Harvard. They're going in and they're buying this farmland, even at above current market prices. So they're going in and they're paying a premium for this stuff, and the article with the Wall Street Journal kind of made it sound like they're doing they're sort of betting on global warming and positioning themselves to benefit from scarcer water resources in the future. And an investment fund like the Harvard Endowment, they've got billions and billions of dollars at their command, and they're having multi-decades long investment horizons. So maybe it would work out for them, but for this being accessible for the individual investor, looking at the Gladstone Land Corp, I'm not really seeing it. Looks like they were started back in 2010. That's when they first start showing up on Morningstar. And they have frequently had a negative net income annually. About 40% of the time, it looks like. Since 3 years since 2000, including 2010, they've had negative net income, negative EPS. They're also trading at a price to earnings ratio of 500. To put that in perspective, I typically do not invest in anything with a price to earnings ratio over 10, and their price to earnings ratio is 500. I can kind of see why someone would invest in this business looking at it. I mean, they went from managing 33 million in assets in 2011 to managing $462 million in assets in 2017. And this is, like I said, a farmland real estate investment trust. So when I talk about their assets, I am talking about farmland that they own. They own almost $500 million in farmland real estates. And if you look on their website and kind of see what their business strategy is, they buy the land and lease it out to farmers. The real estate investment trusts themselves do not actually farm and cultivate the land. And shareholder equity's gone up from 8 million in 2011 to 110 million in 2017. It's gone up even faster in 2018. Like I said, at the end of 2017, shareholder equity was $110 million. And in this most recent quarter, shareholder equity was up to $142 million. So they've been growing at kind of a rapid clip. We take a look back at the income statement here, and yeah, revenue is also up too. They had $2 million in revenue in their first year in 2010, and this most recent year, 2017, they had 25 million in total revenue. So they've been growing quickly. I wouldn't invest in this though. I mean, I like investing in real estate. I like investing in real estate investment trusts. I kind of have a love affair with boring businesses that can be profitable. I think a lot of the times investors get tripped up going for something that they think is cool or interesting, but isn't really a good investment. And farmland, certainly, at least to me, kind of intuitively seems like a stable, profitable thing. You know, land will always be there and people will always need to eat food, so there's no real existential threat to farmland. But farming isn't necessarily the most lucrative thing in the world, though. It's kind of one of the reasons why it's so heavily subsidized by the government. And to be fair to the Gladstone Land Corporation, they are aware of that, and you don't see them owning farmland as much in like cheaper crops. They tend to own farmland and things that they can get a premium for. Like corn is something that doesn't really command a premium, that can be grown really cheaply in a lot of different places, but things like pistachios, almonds, figs, strawberries, grapes, those are all examples of the type of, you know, produce that comes out of the farms the Gladstone Corporation owns. And those are better crops to be invested in, to be fair to them. But I see, you know, I just see better investments out there right now. We talked about United Natural Foods the other day, which is trading at a huge discount to its equity, and shares of Gladstone Land Corp isn't trading at a discount to its equity. They look like they struggle to have a positive income. You know, I said since 2010, there's been 3 or 4 different years they've had a negative EPS. And even looking back on the most recent 10 quarters, going back to the second quarter of 2016, I mean, they've had a negative EPS 4 more times. I don't like seeing that. I can understand why someone would want to invest in a growing business. You know, I don't have the kind of naive expectation that all business enterprises are going to become profitable instantly, but Gladstone Land Corporation, it's been around since 2010. You know, this is like their 8th year in business, it looks like. And they don't seem to be becoming any more profitable. And I don't invest in things just because they're growing. I want to see that they're growing, but I also want to see that their return on invested capital is going up. I want to see that, you know, their margins are increasing, that they're getting more profitable for their larger size and not less profitable for their larger size, or that, you know, there's a wider margin of safety here, and they're not frequently having negative earnings. And I'm not convinced on that front. We look at the statement of cash flows. And I mean, they frequently have negative free cash flow. They have had negative free cash flow annually every single year since 2012. And again, you'd kind of expect that with a business that's been aggressively purchasing land, because their capital expenditures are going to be really high, which is going to drag down their free cash flow. But operating cash flow also has not been really that great. For a business that controls almost $500 million in real estate assets, their operating cash flow in 2017 was $7 million. That's not much money for how much they control in assets. I think there are better real estate investments out there. But I would say if you are set on investing in farmland, Gladstone Land Corp would be the way to do it. I am not a bull on them right now. Like you can see, they've just been issuing more and more and more debt, and shareholder equity has been going up, which is wonderful, because it means they're actually reaping a benefit from all this debt they're issuing. But the profitability has to increase for these guys at some point. You have to see that they can do it, that they can be successful, that they can have an income more often than not, which is kind of something they're struggling with right now. With negative EPSs. There was one thing that I thought was interesting, and it could just be an anomaly, but when you look back at from June 2016 to today, their net income was zero, except for this most recent quarter. The third quarter of 2018, where they reported a $6 million net income. This is kind of a large spike. And I would be curious if this is a step towards them being more profitable in the future. But one quarter worth of data is not enough to draw any kind of conclusions after. And it's important to remember too that the Gladstone Land Corporation, it's a farmland real estate investment trust, and farmland is boring. That's not to say it's not profitable and it's not a good investment, but it is boring, and I highly doubt that a farmland REIT's share price is going to just take off and explode, and you'll miss some great opportunity here. I would take a wait and see approach with these guys. I would wait a year or two more, see if their financial performance picks up, and if it does, a couple of years down the road, this might be a good stock to get into. I just don't think we're there yet. And looking back at their annual income statements, operating income in 2017 was $12 million, and the interest expense was $10 million. I don't like that. To me, that is not a sign of financial strength. They're having to spend a lot of their operating income just to cover the interest payments on their outstanding debt. That's not good, right? If you have a credit card and you can barely cover the interest payment on your credit card, let alone actually paying the thing off, you're not sitting pretty. That's not a good look. So And a 4% dividend yield, I mean, it's okay, but that's also not getting me jumping out of my seat. So, should we follow Harvard's lead? I don't think so. Maybe Harvard is actually looking at different margins, being the actual owner of land themselves, but in terms of, do I want to start investing in farmland right now? Caught my attention. I looked into it. There aren't many farmland real estate investment trusts out there. There might be one other, but I think Gladstone Land Corp is pretty much like, I think they were the first farmland real estate investment trust. You know, and to their credit, they've been growing a lot since 2010. I just don't quite see them being there yet. I'd like to see the interest expense come down. I would like to see them to have a consistently positive net income. And I would like to see them actually decrease their debt, because I think every single year since they've been created, their liabilities have gone up. And every single quarter since 2016, long-term debt has gone up. When eventually I think they kind of need to prove themselves as a mature business and, demonstrate that they have the financial strength to accomplish some of these tasks I've talked about. But again, guys, I'm David at bargainissues.org. Feel free to subscribe to our YouTube channel. My contact phone number on the website, my email address on the website, although it's David at bargainissues.org. I got a P.O. box on the website if you really want to be cool and send me a letter. This never happened. Snail mail is still a thing, though. And I'll catch you guys next time. I post updates on my YouTube channel, Facebook page, and our website. So Harvard's doing their thing with farmland, and I would suggest steering clear for now. See you later, guys. Catch you next time.